Buddy. Monday, July 20th, 2020. How is everybody doing here? Let's see how the weather is doing across the country. I feel like this is almost like watching the morning news. I get to see what the weather is in Florida. I get to see what the weather is in Michigan, at Lake Michigan. 75 degrees is much better than the 80 degrees we're going to get. Thanks, guys, for letting me know that you can hear me. Knock, knock. The fishing was fantastic, Danielle. Unfortunately, I had to go through the ordeal of seeing a dentist on Friday, which is why I wasn't with you yesterday. But thank you very much. Fishing is always good. Standing in the stream, wondering whether or not they're going to take a bite or not. And as I said to all my commentary people from Night Trader, kind of figuring out your positioning is half the battle. Then waiting and being patient is the other half. And that's what I continue to do with the portfolio. We're looking at a market that's getting ready. I look sharp. Thank you very much. Well, you know what? A day out in the woods or a couple of nights out in the woods gets you refreshed, recharged, ready to go. So this is going to be great. So let's talk about the market, though. Let's talk about the market. Let me go straight to the slides just so we can get into it, be a little efficient today. I've got a lot of chart slides for you guys right out of the gate here. We're going to talk about some earnings results from last week. Should you be buying Netflix right now? What do I think about Netflix? What about the price? What price should I buy it at? AstraZeneca, yada, yada, yada. Here, let's go into it. Pre-market trading isn't showing any bias ahead of the open right now. We're down 58 points on the Dow. The S&P 500 is showing about the same right now. The NASDAQ up 20 points. So really, you've got a mixed market, same as what we saw last week. Everybody's trying to figure out what they want to do for the next couple of weeks besides go off to a beach. And I don't think you should be doing that unless you're wearing like 3 masks, so one right over the other, or maybe get one of those hazmat suits, those 3M hazmat suits. Stay away from these hot areas. Anyhow, the Oxford studies due today. Watching AstraZeneca, 14% in 2 days yesterday. AstraZeneca jumps up. It's pulling its own Moderna right now. Moderna obviously pulled back after we saw that monster jump, 20% last week on Wednesday. Is the same thing going to happen to AstraZeneca? I think you know where I stand on that, but we're going to look at some of the other biotechs as well. Stimulus, stimulus, stimulus. Just comments. But, and I can even do them right now. When we came out of this weekend, we saw all the Sunday morning shows. I did get home early enough to see some of the shows on Sunday, and it was almost nauseating how we're hearing all these different comments. First of all, you've got the EU right now that is trying to hammer together a stimulus package. Now we've got our own lawmakers here that are putting together a package. The House is saying that they're going to stay and work until August because the House does that for us. You know, they stay around late. These are our politicians. They typically run off on their vacations. We all know that. But they're saying that they're going to stay until August until we get a package done. It's not going to include some of the stimulus that we saw before. This is going to be a little more stimulus light. I'm hoping that they stimulate the consumer, not the businesses. Let's go down the chain a little bit so that we can actually trickle it up to the companies here. Make it, I think, Mark Cuban has the best idea here. Stimulate the consumer, but make it something that's a time-sensitive stimulation program so that they have to use the money in a certain amount of time. That's going to get money into the economy very quickly. Use it or lose it. If you don't use it, it's gone. So anyhow, if you look at it, we're going to hear a lot about stimulus over the next couple of days here. It's going to be that talking point. It certainly was yesterday on the Sunday morning shows. Watch what they're saying. It's going to pull the market around quite a bit, and know that when we do finally get some sort of stimulus deal, it's going to give us a couple 5, maybe even 10% higher on the market, just like the last one. These stimulus headlines, they may be straw men, they may be whatever you'd like to call it, a paper tiger, but at the same time, they're going to give us that quick run higher, and then the market will come back down afterwards. Let's go back to the slides. I'm done with my stimulus. I'm glad we got that out of the way. And then we're going to talk about where we're heading as the first real week of earnings. I'm not saying that last week wasn't a real week of earnings. We had those the financials come out, but they're not getting any gain for it. This is I realized I do say this is what I talked about, or this is what I told you. And there's a reason, because I want to make sure that we do realize this. We're heading into the first real week, but last week we saw those earnings companies come out, and outside of a very few, and you can see them as we brighten up the bars for you, and we'll make this a little bit larger. You had Goldman Sachs that came out and said, boom, here's our big number. We're awesome. Look at what happened after they announced it. They came back down to 210, right where they were trading before. You could say this is sell the news, whatever you'd like to say, but this is also a double top for the stock. One of the most deadly technical patterns in terms of a stock is a double top, or one of the best is a double bottom. So right now, look at that possible double top, and you got to start thinking, is Goldman Sachs getting ready to head lower after a great report? Here's the other side, Morgan Stanley, because they did the unexpected. Everybody thought Goldman was going to be the one that knocked the cover off the ball. They did it. Morgan Stanley, everybody kind of went, maybe not Morgan Stanley. Morgan Stanley, I think, is turning into the next Goldman Sachs for those of you that like to watch the financials right now. But when I watch the XLF, folks, and we head into another week of earnings here, the XLF is rolling over again. The 50-day and the 20-day are right there together right now to give some support. If you're in those regionals, and I am in some of those regional companies, you see the opposite. The rollover took us below the 50 and the 20-day. If you're holding puts on any of the regional banks right now, which are going to start to report this week, U.S. Bank hits it off for us today. A few others, obviously, later this week that I have some interest in, with Fifth Third and Huntington Bancorp. So these are the companies right now that I think you keep an eye on. The XLF, you're going to see some of the insurance companies, but the big banks are out of the way there. You're going to see Capital One, and I've got a chart of this later in the slideshow. You're going to see Capital One come in this week later. Capital One's going to be an interesting one, because not only are they going to have to deal with default rates, talk about how many of their card accounts are in arrears, if you will, or 30 days plus. Sorry about that. Needed a little drink of my seltzer water here. You're going to hear that, but you're also going to hear about the activity. And I want you to think strongly about that activity, because it relates to this, the XRT, which is sitting up at those highs right now. The retail sector and Capital One are going to go hand in hand. People aren't buying cars on their Capital One cards. They're not buying their education for their kids. Maybe they're paying for some of it, but they are buying clothes, shoes, shirts, whatever you like, on Capital, using their Capital One cards. And with the retailers up there, and this is that bifurcated sector, because you can pull up an American Eagle Outfitter and see that it's heading back down again. You can look at an Abercrombie and Fitch and see that this stock is actually in worse shape, heading back down. A Buckle, some of these cool ones that the kids shop at, they're heading down simply because, I'm not going to go into the ticker for Buckle, simply because the back to school is thrown back up in the air like a house of cards. Which ones aren't? Look at Lululemon. Lululemon in the retail sector can't be stopped right now. Look at Nike. It's a little bit choppier. You're seeing it move a little bit lower right now, but still support from the 50-day and the 200-day. Still like Nike. Dick's Sporting Goods, and somebody's going to ask about TJ Maxx at some point. I'll get ahead of the curve. Look at Dick's ready to break out above 42 here. I like the support at the 200-day moving average. You guys know that this trade has been one that has been on the list for some time here, and I want you to make sure you're checking in with Dick's Sporting Goods. Callaway, ELY. Would have liked to have played some golf. I could have played a trifecta this weekend, maybe gone out camping, golfing, and fishing, and hit Camping World, Callaway, and Dick's Sporting Goods all in one with my walk down Main Street. But Callaway coming in with the same situation. And then, of course, watch out for Camping World. Camping World breaking up through that $34 level. They've got the shorts that were out there. If you look at the short interest on the stock, it saw a little bit of a bump. This is the shorts getting out. Here's a short squeeze in motion, as you can see it playing out. Stock is trading over its RSI overbought level right now. I wait to get back in on this if you're trading it. If you've owned it because you've been listening to me, this is the point where you put in that 3% trailing stop, folks. Put in an order to buy it at $32, maybe even $30 after that. Stock comes back, boom, you filled. You just grabbed 30 to 36. So you got a 20% run in the stock. You close out. If you give away your 3%, you close out 17%. It gets back in at 30 again, comes down and touches maybe even that 20-day moving average, gets down to 28 or so. You turn around and get another 20%. That's how you do it. Let me get back to the slides because I'm way off of the slides right now. So let's go back. Oxford study due today. Watching AstraZeneca and the biotechs. Let's take a look at the charts and get into them right now. S&P 500, and I'm just going to jump right into all of this instead of going through that first slide. It's a waste of my time and your time right now. We want to look at charts and make some money. S&P 500, you can see the battle that we're seeing at 3,200 here. Up to Friday, we bounced off of that level. Third day in a row, we've been using this. Actually, fourth day in a row, if you really want to look at it, because we opened higher, saw some selling on Monday. Then Tuesday, you saw us bounce back up, resistance, up, tried to break down below, support. 3,200 turning into that battleground level for the S&P 500. We're going to pull back below it. Actually, we're not. We're only down 1 point on the S&P 500. We're going to start to challenge that, I believe, at some point here in the next day or so, as we really start to hit the real earnings season. The VIX is telling us a different story, trying to break below its 200-day. It snuck down there on Friday, even though the market's trading a little bit higher. You got the VIX trading down to that support at 25. That's what I'm watching it for, the volatility trade that is out there right now. The volatility trade that is out there is that the VIX is going to 35, and it should be doing it here in the next week or so as we hit that seasonally weaker period of the earnings season and July, for what it's worth. But this 25 test is going to be a key one. If we see a break below that 25, you're going to want to pause. I've got VIX calls right now. I'm going to take a look at maybe either closing those out or doubling down on them because I want to see where the VIX is going to lie. I know as soon as I close them out, the VIX will take off and it'll go above that 200-day moving average and it'll be game on again. But watch the VIX today at 25. So this morning's headlines have been light through the whole evening. I woke up at 2 o'clock or so last night. Couldn't sleep. Check the headlines. Nothing. They're talking about the potential for a they're talking for the potential for a stimulus package in the EU, and they're talking about what's going to happen here. They are talking about Halliburton actually earlier this morning when they came out and bested the results. If you didn't see the numbers in the energy sector, this is one of those best in breed companies that I expect to actually survive whatever we're going to see in terms of we're going to see some consolidation within the group. But Halliburton came out this morning and the good numbers, the company's looking high, 4.7%. It's trading off of their strong earnings number. And they gave flat guidance. They didn't give a up or a down. They gave us flat guidance, trading 4.7%. We'll look at the chart in a second. This is one of the best in breed companies in the energy sector. You've got your Devons and you've got your others that are just not going to make it. And then you've got your Halliburtons that are going to trade higher. So right now I look at Halliburton, I say that's one. Traders are waiting results from the Oxford study today and its result on AstraZeneca, up 14% in the last couple of days last week. I think this is going to be one of those situations where AstraZeneca is going to get a little more of a poke here. If you look at it, trading up to $61, it is in overbought territory. You've got another 1 or 2 days of this stock trading higher. If this news comes out and it's better than Moderna's, think about it. What we talked about last week is they've got the distribution and the production chain to make this drug get out there into the market as quickly as possible. They would have license and manufacturing on it. You're going to share it with others because you're going to have other companies making it as quickly as possible so we can get doses out everywhere. But at the same time, AstraZeneca is going to be able to do a lot of that. 6.39% it was up, and it's trading a little bit higher in the pre-market. Let's see where we're trading this morning on AstraZeneca. Give me a second. So you're trading another 2% higher today. You're trading at 62.31 on the stock. Like the fact that it's continuing higher. I think this is going to be a little more of a rally than what we saw in Moderna. When we look at Moderna now, obviously the stock is Moderna is going to be one of these stocks that's going to continue to sawtooth. You got the extra bump higher on Friday. Look for that to sell off a little bit because this stock, again, is one of those where we see the pullback. I think AstraZeneca is going to give you a little bit of a reason for the that pullback. I've got great news actually. I just pointed out on the chat here. That is some of the news that's coming through. Chevron is actually buying Noble Oil, NBL, CVX, and NBL coming together. Watch your ticker symbols on those because they are NLE, I believe, is another Noble, but Chevron coming in and pulling another, and they are one of those other best in breed. They're the big daddies out there. Halliburton, Chevron, ExxonMobil are still big companies out there, whether or not their dividends are shaky or not. But this is what we're going to start to see, people. If we look at the actual outlay or the layout of the energy sector, you are going to see consolidation right now. Looking up at futures right now, and you've got crude trading down 0.4% right now. So it's one of those situations where we're going to see lower oil prices coming. That means that you're going to see much less production on the United States side, and some of those towns in Texas and all over the place in the Dakotas are going to start to slow down. But Chevron, Halliburton, maybe Schlumberger is going to be out there doing some buying as well. You're going to see a lot of consolidation in this group right now. You're absolutely. AstraZeneca, watch for it to follow Moderna at 60 right now, 60, 61. I like the stock to be trading up around 75 here over the next 3 months or so. And I think it's going to be a steadier 75 than what we see in Moderna. It's going to jump up there and probably have some staying power. Halliburton, I mentioned their positive news. The stock is trading up 5% today. Watch it for a trip up $16. I think Halliburton winds up trading up on that 200-day moving average, just like it did back in June. This is a nice trade on the energy sector if you want to go bullish side. Large company. This is going to be one of those that is really going to start to lead the way here. Now you look at a couple of others, and not many people watch this name. Calm. I love the ticker symbol too because it's calming. And Maine. I love Maine. You guys know that. I go to Maine as often as possible. So Cal-Maine Foods came out, bested earnings. Outlook was sideways on it. They didn't give an up or down. 50-day, 200-day moving average right now on Cal-Maine, CALM. This is one of those, like I said, again, that a lot of people don't watch. The stock's trading flat right now in the pre-market, right at $44.16. Just a little bit lower than where it closed at $44.22 on Friday. That has been a nice consolidation that you've got going across here. I like Cal-Maine because I like the fact that a lot of these food, and they produce eggs. I mean, it's simple. Keep it stupid simple. And they're not, ironically, they're not in Maine. They're based out of Jackson, Mississippi. But its eggs are sold. Its eggs go up to Maine. So they sell them in the Atlantic, the Midwestern, and all over the place. But I love the fact that they are one of the largest egg producers out there. It's about a quarter of the U.S. egg consumption Cal-Maine does right now. If we look at the fact that we're getting back to people are going to start cooking inside again. People are going to be a little more pandemic-ish as we start looking at what happens over the next couple of months, and states are starting to think about closing down again, and we're wearing masks at minimum. I'll be honest, I don't feel like going out and eating. As much as I do like to go out to some of my local haunts, I don't feel like doing it. Keep an eye on Cal-Maine, beating on the earnings, nice technical support, stock that's going to be trading up to $50 here in the next probably month or so. IBM, Big Blue, coming out tomorrow after the report, after the close tomorrow. Looking forward to, and this is where we're going to get it, looking some of the charts right now that are coming up here, folks. I think it gets a little dicey with IBM, with Big Blue. This is one that we've seen people kind of dab into, not really jump in. When you look at it and you cross your eyes a little bit or stare at the chart for long enough, you start to see a little bit of a head and shoulders, and it's wider than normal. You got a neckline at the 122.50 right here, right where that 50-day moving average is, the stock is basically flatline, and that's why you got a 50-day that's going flat right now. But you've got a left shoulder here that had a nice amount of volume trading on it. You've got a peak that had some volume behind it, your head, and then you've got a right-handed shoulder that is seeing declining volume. It's what you want them to look like, folks. A break below 122.5 gets you a run down to 110. 110 pretty quick on IBM. They are known now, and this is one of those. It's not, and obviously they dropped a lot of the police and the law enforcement agencies are dropping their use of IBM's facial recognition right now. IBM has spent the last 7 years trying to put itself together again. They're kind of like a Humpty Dumpty fell off the wall. All the pieces were all over the place, and they have pieces for a great company. The problem is they just got too big. They're another GE. When I talk about the blue chips and the new blue chips, these are new Intel, NVIDIA, the company's Microsoft that figure out things on the fly, go fast. If you look at GE, if you look at, in this case, if we look at IBM, you've got this company that kind of lost track or got too big for itself, started doing way too many things, and now they're trying to figure out how to turn that boat around, how to get it so they can be more effective. And you know what? The only way you do that is you really start pulling it apart. I think that the CEO that is in charge now has been doing a good job of trying to get us there, but this is like turning a huge yacht around in a creek or a barge around in a river. It's going to take a lot. You're talking about a 27, 30, 35 point turn to get this thing so that you can change direction on it. Right now, I look at IBM and think that we look a little bit down to that 110 level. It's kind of almost like one of those Boeing situations where you could see what's going on real time, and know, that the stock is in trouble. Watch IBM on this announcement. They're going to have to knock the cover off the ball. If they don't, and it's not a great environment, especially with businesses spending on other areas, it's not a great earnings season to knock the cover off the ball. JB Hunt did it, though. JB Hunt traded on Friday. The stock traded 3% higher. The transportation stocks, Airline, right now are starting to hum. They've got a couple other trucking companies that are coming up this week. I'm going to be writing some stuff to my night trader people on those, because this is where the opportunity lies, even though we're not going to see an economy that's going to shut down. And I really don't think we're going to see a close down of the economy, maybe at some small levels, at county levels here in Ohio. That's what they're talking about doing, but not the grand scope the way we saw it before. Stuff's got to get from one side of the country to the other. We've got ports that are starting to get busy again. Everything from building materials, housing's still going through the roof right now. Look at that ITB. If you look at that particular, look at LGIH, look at a couple of the others that are in that area right now. These are companies that, because of that report that we saw last week, are going to continue to go through the roof, folks. Toll Brothers is another one that, even though they've got, a little bit more expensive houses, are breaking through their 200-day moving average right now. That's where you want to be. You want to get into those, into some of these home builders right now. One of them, and you're going to see the chart in a second that I'm afraid of, they report this week, iRobot, look at how high it is right now. This stock has done nothing but go through the roof. Why am I afraid of it? 130% up from last earnings quarter. If you look at the stock, though, they had a bad report last earnings season, and I'm wondering if they're going to have a marginally bad one this earnings season, even though I've got two of those things running around picking up hair from the Stone Cold Killer and my other dog, Obi. But nonetheless, I think that this is where you're going to see a little bit of slowdown in the housing. And this is considered a housing retailer. I think this is where you see it. I like right now iRobot to dip down to $72 here over the next couple of, probably the next 3 weeks or so after the earnings season, report this week. I think you get a chance to buy it back cheaper there, and then it's going to be a carry on. Let's move over to JB Hunt again. JB Hunt, take a look at that one as your long play. Netflix. What in the world do we do? What in the world do we do over the Netflix melee, if you will? Netflix comes out, should have been a slam dunk month. They should have actually been able to really throw in, I guess, just a an easy quarter. You figured everybody would want to be in on Netflix as they announce their earnings. The bottom line is they didn't add as much subscribers as they thought they would. The numbers actually came down. So the question now becomes, where do you buy Netflix? The answer for me, 460. 460, 50-day moving average. Netflix is going to unwind as we see a lot of people come out of the trade right now. You're going to see some of the pros moving money out of it, breaking down below the 20-day moving average. It's going to show some support here, bounce between 500 and then go back down below 480. 460 is the level that I'm looking at the limit. Watch for the volume to keep trading a little bit higher on the stock. 460 is the mark that you set as your limit right now. If you ran it up at 560, I hope you had the trailing stop on it. This is just one that has the analysts scratching their heads. You know what? They really should have had a slam dunk. Sure, they've got pressure from Disney. They've got pressure from Peacock. None of that is tested though. Netflix is tried and true. Part of it is their original content. They can't get it back up online fast enough right now. It will happen. You're still going to want to own it 6 months from now. 460 is the price. Absolutely couldn't point out that 460 would be the price to buy it at, and you will want it 3 or 6 months from now. 3 or 6 months from now, you're going to be looking for the Netflix to be in your portfolio. So, one more too. We're heading. Oh, sorry guys. We're heading. I'm a little bit distracted looking at the chat here and talking about an Amazon trade, and that would be the Amazon short from a long time ago. Yeah, that's thanks for Ben. Everybody, thanks for making the explanation. I would have. It was one trade out of I don't know how many hundreds here, and sorry that you don't want to. At least that one trade went poorly. We got LGIH. It's up 400% from the same system that we're using. So they happen. Sorry. This has been one of those trends where you actually, you know what? For a second, let me just go onto the screen and say, without mentioning names, without mentioning trades or everything, we deal in something here that is trading. It's investing, but it's also trading. It's not gambling. A lot of people would say it's gambling. It's not, because we have data, we have trends, we have all of these things that go behind us. When I put up $1 into a slot machine, that's a gamble. When I put $1 into short on Amazon, I've got data that goes behind it and says, could I be wrong? Yeah, I can be wrong. I'm right more than I'm wrong. And as somebody's already pointed out, you get to do whatever you like with the data. You can close it out at a 20% loss. You can close it out at a 50% loss. You can not get into the trade at all. And then you've got situations where we've got LGIH, we've got, Ollie's, we've got these trades that they go through the roof. So I'm sorry that one of the trades didn't work out. But at the same time, I can tell you that a lot of the trades do. With that, I'm going back to I had to say that because I was a little bit off for a second there, guys. Yeah, and we're dollar in a slot is a loss. LOL. We are dollar in a slot is a loss. Yes, it is. Short the dollar on that. On that nice note here, my fast profits from 3-4 weeks ago. UDN. Short the dollar. Have a dollar hedge in your portfolio, guys. Dollar's going down. Gold continues to go up. Barrick Gold got bounced around pretty hard last week. Anyhow, let's look at some of the earnings you need to watch here in the next couple of days. I brought this chart up last week. The Jets, airlines are coming in heavy again. You've got a United, you've got Save, Spirit. You've also got Southwest is going to report this week. The airliners are going to come out and basically say, we're just trying to figure out ways to not lose money on a daily basis by the end of the year. This is a dire situation. Also, the July travel statistics came out from the TSA, and they were bad. You saw another big decline in those numbers. Right now is not the time to be buying United Airlines. It's not the time to be buying Delta Airlines. People make fun of Mr. Buffett because he sold Delta Airlines, but the fact of the matter is he buys investments because they're going to go up. Right now, this is a tradable stock, and that is it. Warren Buffett is not a trader. He's an investor. I think he's made that clear. Delta Airlines, look at where its situation on the 20 and the 50-day squeeze. Anyhow, back to some of those charts that we want to look at. United's coming out, trading back below 35. 20-day moving average is now starting to head back down lower again towards that 50-day. This is a stock that's actually going to run into some trouble with their announcement, because they're going to announce that they're getting rid of some of those employees in October. They won't tell us the numbers exactly, but because they can't. Watch the $32 price level on United Airlines as they head into that earnings. And again, that 50-day moving average. I am bearish on United as I head into it. Southwest in a little better position. Their balance sheet's better than most others. If I'm going to buy one for the long term right now, it's Southwest. They don't lease a lot. They own a lot of planes. 50 days turned higher on it. We're above the 20-day. I still think they run into problems with their earnings announcement. If you're looking to buy it, this is a stock that you could put a 32 limit in on maybe and hope to grab that at that point and get strength from the 50-day. Right in the middle on the overbought, oversold indication, so nothing's going to come from that. You may get a run back up to that 42 after we see a little bit of selling after earnings. Love that trade, though. A little dipsy-do down to 32 and then trade it up to 42. Boom. That's a nice trade right there. That's a 33, 34% trade. Chipotle Mexican Girl is going to come up later this week. Chipotle has done it right from the beginning. And I'm not talking about the beginning of the pandemic. I'm talking about the beginning of this damn company. This company has done it right from the beginning, folks. I used to go there. I'd go there once. And when I go back to the office, I had the burrito baby nap afterwards, right? And I figured it out. They're giving me great food. They're giving me great quantity. They give me what I want. All I have to do is eat a quarter of the burrito and then I'll be happy. And that's what I did. If you look at how they've just adapted their company, kept it fresh, they don't get into kitschy stuff. They don't need to have the McRib coming back I've never had a McRib in my life. They don't have to have the McRib coming back every 3 months or anything like that. They keep doing what they do, and that's why I love the company. I think you're going to find out. I see the crowd on my walk down Main Street. You can see I'm a little more excited now. I get to talk about the trade thing there. Every time I do my walk down Main Street, there's a crowd outside of Chipotle Mexico Grill with their cell phones because they put in their orders. They're waiting for it. Boom. Great execution, adapting. That's what gets you an earnings beat. And this is what's going to happen if you look up to Amazon. It's an expensive stock trading over $1,100. The stock is going to continue its calling to higher prices. It's going to be another NVIDIA of the food service, not a Darden. If you look at Darden right now, I'm starting to get a little bit of afraid of Darden. I did drive by a Darden actually earlier this week, saw a nice crowd out there. Tells you that the stock price should be doing a little bit better because they're seeing more revenue, and it is. It's holding in sideways. There are other in the group that are going down right now that I think that you're going to find some problem with. Bloomin' Brands right now is kind of starting to slip. Darden's making some strength here right now. Just watch these stocks, folks, is my point. Watch these stocks very closely. Let's go through the rest of the earnings charts that I wanted you to look at. Citrix System. Who uses Citrix? Nobody uses Citrix anymore. Actually, you don't know who uses Citrix because they're trying to keep themselves secure. Zoom, everybody uses Zoom. What's wrong with Zoom? Servers in certain places that we may not want. They're actually talking about making Zoom a United States or a company that's going to be trading here, will be solely here, kind of like TikTok is what they're trying to do with TikTok. Citrix System is one of the OG in webcast or the online web meetings. This is one of the companies that I used to use 15 years ago. I used to control my computer with Citrix, CTXS. It is not sexy, as I've put to a couple of people here in the organization at MoneyMap. It's not sexy, but it works, and more importantly, it is secure. Cisco is the other one that's out there secure. You're going to see Citrix Systems come out. I don't know why Expedia is on there. The chart is, but let's look at the chart of Citrix because it's a nice chart as we look at it through the pandemic here. A little bit of chop as we've seen through June and May, but now you got a stock that's getting ready to break up through the 155 level, break into new highs as they get ready to report earnings. Citrix is going to come in, and it's going to be, yep, I picked that up, that it was the Expedia. I like the Expedia chart. We'll take a look at that as well, even though we're going to have the airline companies coming in. And with the lower travel from the TSA numbers, Expedia is going to have a little longer to go, but it is going to be the easier way. Put it this way, Expedia is not worried about giving, they're not going to be worried about their burn rate as much as United and Southwest and Delta. They're not talking tens of millions of dollars in burn rate on a daily basis. Expedia has a much more efficient business plan right now to be part of the travel industry. And I think that's why it remains one of those stocks that I would rather be taking positions in Expedia over anything in the Carnival Cruise Line area, in the Norwegian Cruise Line area, in any of these. Expedia is going to be booking those before they start taking the trip. That's why you're in Expedia. So let's bring it in for a landing, no pun intended here. What are you going to watch this Monday? We got about 5 minutes left until the market trades. Normally, I try to get you out right before the market trades so I can start getting ready for my 11 o'clock people, my night trader people. Volume's going to start creeping into the market again. Volume means volatility. NASDAQ is opening a little bit higher this morning. Right now, I'm looking at futures are up 11 points on the NASDAQ right now. Actually, yeah, you've got 20 points, let's call it, with when you figure in the fair value on them. You're about 20 points higher on the NASDAQ right now, showing some strength. That is a familiar story for us, but we saw it fail last week. So watch it. Why do we see it fail? We're seeing people go into the market and actually start to sell some of these on the strength. So watch NASDAQ along with me. I'll let you know what you need to do at certain levels on the cubes, but Microsoft's coming up with their announcement later this week. That's going to give us a little buy the rumor on the NASDAQ 100 since they're up there in the top. Microsoft, I expect them to knock the cover off the ball, but at the same time, we expected Netflix to do the same. Speculative money is now likely to start coming back out of the market. The IWM gave us a little bump in performance. I think that performance chasing may be slowing down for now as people start to get the reality check. Eyes on the VIX as it's still at 30. 25 is that level that I want you to watch very closely, and the 200-day moving average. At this point with this, the 25 and the 200 are the right now the bottom, if you will. They're the rubber bands that should be slinging it above 30. And the remember that I want you to remember is that low prices do not equal low expectations. And what I'm talking about with that, guys, is these stocks. And I'm going to do another piece on Robinhood this week on MoneyMorning.com that's going to go through some of these low dollar stocks that people have been buying and bidding up as quickly. You know, bidding up it hurts right before they go bankrupt, that type of a thing. Low dollar does not equal low expectations. Remember that when we're heading into earnings season. It also means a sell-off ahead of the earnings season does not mean that you should be getting out of a stock. It means that there may be an opportunity because the market is starting to undervalue the expectations of that stock beating. Watch them very closely. I've taught you, there's something up on moneymorning.com. Tesla being a great example of, high prices equaling or not equaling high expectations. I don't think the high price of Tesla equates to a high earnings expectation. I think that Elon Musk being out there waving his booty around in some satin shorts, and we haven't seen that yet. But I think that Elon Musk coming out there and waging war against the short sellers, which I'm putting together an article today on 3 stocks that the shorts are getting killed on, that we're going to see short covering on. So 3 stocks that you're going to see short covering on, that'll be coming up here in the next day or so. But something that's interesting. But anyhow, back to Tesla. High prices do not equal high expectations. I think that the market is still underestimating what Elon Musk is going to do with this company. If he would be a little more quiet, the stock would go up actually a little faster. You look at Tesla, though, and the pullback, we saw that nice run up. I mean, just absolute one-day shot through the roof, consolidated around 1,500. I think that's where the market's happy to see it sit until after earnings. They don't want to make any irrational moves up to 1,800 or so, but give it a little bit. This is one where you let the earnings report come out and then you react. If it's a great report, the stock's going to go higher. It's probably going to come back a little bit. Set your limit. If it's not, if you already own it, have your trailing stop loss in, because if it does shoot up, you're going to want to get that little bump. How many people wish they had the trailing stop loss set when it rang the bell at 1,800 last week and then just shot right back down to 1,500? You'd be in a great position, right? Stop trailing stop losses and limit prices, guys. That's how we play this market. All right, I got to go. You got 2 minutes till the market starts trading. Thanks for everybody on your comments about the trade, backing me up on the Amazon. Again, they happen. I hate missing opportunities more than I hate booking a loss. That is the mantra of the trader. I can book a loss on Amazon, but I can go out and find 10 more that are going to be profitable on something else. That's why we're here, guys. That's why we're here. And I'm looking forward to being here again with you on Wednesday. Remember, you're going to be with DR tomorrow. I get a day off Wednesday, and then my night trader people 11. As always, I wish you the best trading success. Let's talk some 10 commandments of tradings here this week. I've got to start getting more of those out, maybe put together a report together for you. It's been great being with you for the last 45 minutes. I'll see you tomorrow, or I'll see you Wednesday. Have a great trading day.